the key to a confident retirement? We will talk about it today with Chris McIntire, president and founder of McIntire Retirement Services, Northwestern Ohio's resource for that common sense approach to planning for your financial retirement future. He gives guidance and advice on your money, your investments, your finance, your retirement accounts, and brings it all together into a comprehensive plan, calls it the game plan for retirement. And we'll talk about how the game plan for retirement helps you achieve and accomplish that ideal, optimized vision of retirement into the future. Chris, always a pleasure having you here on the program, and no lack of things going on in the world today. And we really need to focus on what we should be doing for our financial well-being moving forward.
Yeah, without a question, Peter. And, from, the election to geopolitical risk around the globe to the inflation threat, especially the inflation threat, since we're talking about retirement and income. Inflation has a huge impact on that. And then, the interest rate environment that we have right now sometimes helps us with this a little bit easier of an income story, if you will. And a generic example is, well, look, I can buy a CD at 5% or a fixed annuity at 5% and put in $1 million and pull 50,000 out, and I'm good to go. I'm no risk to principal, living off my interest, that kind of thing. So it's a little more elaborate than that for most folks here, because not everybody's got $1 million laying around they can throw into a CD. And again, that money would be tied up, right? Because I need to park that money there so it can generate that amount of income. So there's some ways that we can help shrink that dollar amount, but keep that income coming in that respect, Peter.
Well, we will talk about putting it all together into the game plan for retirement on today's program. Remember, ladies and gentlemen, that if you've got questions or concerns about your money, your investments, your financial and retirement planning, that Chris McIntire is your resource, with offices conveniently located across and throughout Northwest Ohio. He's got an office nearby you, or you can always just start with a phone call, or the ease and convenience of a virtual meeting is available as well. But if you've got questions, if you've got doubts or concerns on your mind, don't let them linger. Address them with an experienced, qualified professional, in fact, team of professionals there at McIntire Retirement Services. All you need to do is pick up the phone to get the conversation started. That is 800-868-1194, 800-868-1194, 800-868-1194, or you can go online, McIntireRetirementServices.com, McIntireRetirementServices.com. And in uncertain times, how do we plan effectively for financial stability in our financial life? Well, Chris, the paycheck that we have is always what provides stability and confidence, even when markets kind of go wonky. And it's been a great year and a great run, really, since the end of 2022 for the markets, but we are starting to see some instability here. And so we just kind of circle back to those basics. What can we count and rely on? And it is the income and income planning that helps us to address and answer those concerns.
Yeah, no question, Peter. I kind of refer back to a new client that we brought on board last year, and he says, okay, so if I take some money out of the market and park it over here, okay, I'm going to get X number of dollars guaranteed for the rest of my life for my wife and I, right? Yep. And, we went through, put that plan together. This is an income allocation. He said, okay, all right, well, between that and our Social Securities, that's going to cover our most of our living expenses and even a little bit of extra money. So that means all the money that I have left over in the investment portfolio, I don't need to rely on that for income. I can invest that for growth, basically. And, it's like, yeah, you have an income allocation model that we did. And, we have a book here. My buddy Dave Gaylor, your buddy too there, Peter, all things being equal, had written a book on income allocation. And we still have a number of copies of that there that we hand out to a lot of our folks that come to our classes or come into the office here to talk about breaking this down, right? If we think of income allocation, most folks are probably thinking, well, is that asset allocation? Well, asset allocation is I've got assets in stocks, I've got assets in bonds, I might own some real estate. Those are different asset classes. And, if you have like a retirement lifestyle fund that's got the year 2025 on it, for example, okay, that means that fund is getting more and more conservative because those people who are going to, are thinking of retiring around the year 2025. So more of that money is shifting into bonds. That's an asset allocation model. That is not an income generating portfolio. That's an investment portfolio. Okay. So, we will often carve off pieces of people's nest egg to create an income strategy so that they don't have to rely on their asset allocation model to get what they need to. Does that make sense, Peter?
Yeah, it does. And when we look at that asset allocation, that mix of stocks and bonds and mutual funds, Chris, the lump sum that we have saved up and accumulated and built in our investment portfolio, our 401ks, that has been as a result of and supported by the income that we had, right? The setting the alarm, the trading our time for money and a paycheck is what gave our lives financial stability, but it is also what supported that model that you described and allowed us to build it up.
Yes, absolutely. And the earlier that we can do this for folks, certainly the better that it is, because we use some certain income allocation models that the sooner you get started, the greater the income gets each year that you delay. And so pre-planning some of this is fantastic. That's why we often talk about here on the radio show is, look, if you've got an old 401k at a previous employer, or you're over the age of 59 and a half with your current plan, we can start to do some of this pre-retirement planning, for age 62, 63, or whatever, if you want to work until Medicare kicks in, which is obviously very popular, so people don't have to spend a couple $1,000 a month on health insurance.
Indeed. And Chris, when we're talking about income, we also always have to talk about taxes, right? The two go hand in hand and certainly will continue to be a factor into and throughout our financial and retirement future. A lot of people right now, I think, are sort of waking up to the realization or starting to come to it that taxes may be higher in the future, or that right now may be a good time to do some planning for income that involves tax management as well. Is that part of the income allocation process too?
Yeah, no question about it, Peter. Here's an example. Somebody wants to retire at 62, like we were just talking about. Okay. And maybe they have to go on the private market to buy their health insurance until they're 65 and transition into Medicare. And they say, look, I want to, from 62 to 65, we can do a lot of things in good health right then and there versus working just to pay for health insurance. So then we can say, well, look, you've got some money in a Roth IRA, you've got some money in a savings, we can convert a little bit more into that Roth IRA so that you can pull that out tax-free, and you might be able to go into the Affordable Care Act or the exchanges and get very affordable health insurance, excuse me. And, instead, like my wife and I, we pay about $2,100 a month for our health insurance, but if you can look, we always say, quote unquote, poor on paper. So living out of a savings account or living out of a Roth IRA that are tax-free, your income's going to look a lot less on a 1040 that's going to go to the Internal Revenue Service for your adjusted gross income, your modified adjusted gross income and whatnot, that sets the parameters for how much you're going to pay for health insurance. So that's a long-winded explanation of, tax planning as part of income planning, as part of investment planning.
And a lot of people, Chris, don't realize that the income that we have during our working career can actually impact our healthcare costs, even into and throughout our Medicare years. The Medicare premiums are actually income means tested, essentially, and look back a couple years to determine that. So that also needs to be taken into account with a true comprehensive income plan.
Sure does. And, somebody probably listening today is going to say, well, I want to keep my income low so I don't have to pay tax on my Social Security benefit that I'm going to get. And, we're not as concerned about that one as we used to be, because, people just simply need money to live off of in their retirement. And a lot of times that's going to ensnare some of their Social Security benefit for taxation, because those levels have never been adjusted for inflation. So if you're a married couple with income, provisional income, we call it, of $32,000 or more, you're going to start paying some income tax on Social Security. So I think in the year 2024, $32,000 isn't what it was in 1983 when those parameters came up. So we're a little more focused on the Medicare premiums that, a big IRA withdrawal could certainly have an impact on your Medicare premiums. And remember, they're looking back 2 years. So for a lot of people that retire at age 65 and their income was $250,000, for example, but in retirement, it's going to be 80,000. You want to make sure you're reaching out and talking to Medicare and Social Security about, look, I'm retired now. That income isn't coming in now. And hopefully they'll give you the waiver, if you will, so that you're paying the normal amount. I think it's $175 here in 2024. And then if your income goes up, then that Medicare premium deduction from your Social Security benefit goes up as well. That's what we're referring to, what they pull out of your Social Security benefit.
A double, triple whammy in the wrong direction of things costing more in retirement on us, Chris. And then, of course, if we've got that higher income, more in taxes as well. It's like the things that we don't know and the things that are not really discussed and addressed during our working career are the things that surprise us and can bite us in retirement. And that's why, ladies and gentlemen, you only have one shot at an ideal retirement. You want to do it right the first time. Smart people learn from their own mistakes, but we don't have that time or luxury in retirement. We want to learn from the mistakes of others, or at least be educated and informed on important factors and considerations like the Social Security taxation, like the Medicare means testing on the premiums, and control what we can, like the taxation of our retirement dollars. The more you get to keep, the lower that tax bill, the more you get to spend, the more advantageous, the better your outlook for retirement. And that takes proactive planning and tax management and control. And there are opportunities to do that, as well as avoid some of those double and triple whammies there. So give a call to the team of experienced, qualified professionals and your resource, Chris McIntire, and the rest of the team there at McIntire Retirement Services for that complimentary, no cost, no obligation review, retirement planning strategy session, and to design the game plan for retirement, your game plan for retirement. 800-868-1194 is the number to call. That is 800-868-1194, 800-868-1194. Now, Chris, when somebody does have questions, expresses interest, gives you a call, comes in for that review or to have a conversation, there is no cost or obligation for that. And in that initial discussion, welcome to share as much or as little information as they feel comfortable. Correct me if I'm wrong there, but describe the process of that initial strategy session and review, and then the beginning parts of designing and implementing an income allocation.
Yeah, Peter, thank you. Yeah, somebody listens to the show, has never seen us or talked to us before, wants to come in, have a general conversation. We've been in this a while. We understand there's always apprehension on sharing information, and especially in today's world, let's be honest. I mean, we're as concerned about it as anybody else. So we can keep things pretty generic in that first meeting and talk about, well, how many what's the rough estimate you have in your 401k, and kind of work in generalities from there. Now, I'll be honest, we've been in this so long. It's like, look, the sooner we can get specific, the better that we can do for folks as well, too. We don't want to have 4 meetings before we're looking at investment statements, obviously. But, some people want to come in and say, okay, you're independent. So, what type of infrastructure do you have that supports your practice, or a succession plan, that type of thing. And, we utilize, Charles Schwab, Fidelity as our custodians, and, just kind of get a feel for the practice and some of the things that we can do. So we can have that initial consultation, and then we always will discuss what happens at the next meeting. And then typically after that, we're getting into very specific recommendations and the cost to do business with us, and how those pieces work out. So yeah, very transparent when you work with a fiduciary.
Well, again, ladies and gentlemen, to set up that time or to initiate that conversation, just give a call to McIntire Retirement Services, 800-868-1194, 800-868-1194, 800-868-1194. Chris, I do imagine that kind of general numbers, at least in an initial conversation, do work, because from the beginning of the conversation to the end of the conversation, the exact specific numbers, if our investments are in the market, are going to be a little different anyway, right? I mean, it doesn't take much time for that market to move.
Yeah, that's right. And it moves in both directions. Thankfully, we've had a pretty good stock market since let's call it 2023, and even into the first quarter part of 2024 here. And that's certainly no guarantee of where we end up, right? A lot of volatility here, the tensions in the Mideast and whatnot, the Russia, Ukraine, the US, our fiscal status. There are a lot of issues that need to be paid attention to, and we're certainly not waving fear flags. That's not what we do here. I mean, I've got a number of clients that think the end of the world is happening tomorrow, and other ones that are very bullish on the stock market with all the money sitting in basically money market accounts right now, looking for opportunity. There's a lot of stimulus out there. There's a lot of reasons to be positive toward the overall economic climate and whatnot here in the U.S. You just have to turn off the news to pay attention to some of it.
Chris, I'm going to make a little bit of an analogy. If somebody's parents maybe only made it to, 75, 77, and then therefore they are only making a plan or assuming that they will only make it to maybe 80 years old, and then they are wrong, right? That is a bad side of the assumption to be on. Whereas if we plan to live to 101 and that doesn't end up being true, we don't make it quite as long, right? That's not as painful a side of the assumption to be on. And likewise with the market, if we assume that the end of the world is going to happen, that the zombie apocalypse is imminent here, and we plan around that, but then we're wrong, right? That could be a pretty painful reality. But if we prepare for that, or maybe are aware that this could happen, take some safeguards, albeit that's fine. But plan as though life is going to go on. I think that is a better side of the assumption to be on. Does that analogy make sense?
Yeah, it sure does. And it's our buddy Tom Hegna, one of the talking heads in the industry here, very well respected around the insurance industry, if you will. Talks about longevity risk being the number one risk that we have to mitigate. And, as the people listening to this show, their probably biggest concerns are running out of money in retirement. And, we've said before, look, running out of money is one thing. Running out of income is something completely different. Because if you had, no money in your investment account, but your income was $100,000, I mean, that's two different sets of circumstances, and that was contractually guaranteed for the rest of your life between Social Security, pension, and if, since we use the word insurance, if you had an annuity payment that was coming in guaranteed for life, that's a heck of a lot different than having a zero balance in an IRA statement versus when you have $100,000 coming in. Does that make sense, buddy?
Yeah, it does. It does. And Chris, you've got a list of different items that can be part of the income plan, or basically comprise the income plan, right? Is working for income, getting that paycheck, Social Security, pensions, interest, dividends, real estate, partnerships, investments, annuities, bonds, dividends, all of these good tools. Actually, kind of dovetailing on the last comment, though, one thing that I specifically see absent from this list is that zombie apocalypse insurance, gold. We hear an awful lot about gold. I'm all for gold. I'm not against it in any way, but gold does not make a great income planning tool, does it?
No, it does not, because it doesn't pay a dividend, and it's like a growth stock, if you will. I mean, it's only worth what somebody is willing to pay you for it. And it's fair to say gold's had a pretty good run of it here. It likes volatility in the geopolitical sense, but yeah, it's not something that we put in an income plan. It might be something that you have as an investment. And I have a lot of clients that ask, hey, can we add a 5% allocation to gold or silver or even any of the other precious metals, giving the EV electric batteries and all those things that we're looking at? And yeah, that certainly makes sense. But when we're looking at income, we want, like Peter said, dividends. Real estate pays rent. Okay, whether you own the real estate or you're buying a real estate fund. The bond side of things, interest rates have come up. We could say CDs. Annuities with the contractual guarantees of the lifetime income that can be out there. Some wonderful products as interest rates have come up with higher annuity payments, things that you and I haven't seen in basically 20 years, all of a sudden reappeared, as interest rates went up. That's very good for the annuity landscape. The amount of income that they can provide when interest rates are at 4 and 5% is a lot more than they can when interest rates are basically 1%, let's say.
Yeah. So with all of those tools, let's get into it, Chris. There are pros and cons for every financial option that are out there. But Social Security has gone up significantly over the course of the last several years. There have been some historic cost of living adjustments on that. That's a great income tool. Pensions, great income, interest that we can generate, maybe better than we've seen, as you mentioned, in the last 15 to 20 years. Payout rates on certain financial vehicles, bonds, yields, annuities, CDs, things like that, is now maybe the best time that we've seen here, at least in recent history, to look at beginning to set up a structure or evaluating our income plan?
Oh yeah, without a question, we use some structured notes through our partnership with Brookstone Capital Management that have very, we would say above average yields. And then what we have to do is say, okay, here's all these vehicles that can create some income. Okay. Now, based off of your risk tolerance, you're okay being in some dividend stocks. Okay. Or based off your risk tolerance, we might want to be over here more on the bond annuity side of things with you because more conservative in nature. And again, I'm just saying things in very generalities here, guys. I'm not saying somebody that's conservative shouldn't own any dividend stocks at all, but yeah. Broad audience disclosure there, right?
Well, the thing with dividend stocks, right, Chris, is I buy a share of stock. I'm the owner of the company. I hope that the company goes up in value over time. That's the share price. But as the owner of a company, if the company is profitable, I should also be entitled to some of the profits of the company. Those are dividends, right? That's where dividends are created and paid out. But Chris, even successful companies aren't always profitable. And sometimes the lack of profits come when the stock market is volatile and the share price, the value of the company is down at the same time. That's happened many times. And then if we're relying on just dividends alone, that means that we don't have as much income and we don't have the capital simultaneously to go out and try to seek out other alternatives to replace that income. So I know you're a fan of dividend stocks, but again, pros and cons for everything. Where do dividend stocks play a role in an income allocation or a retirement income portfolio?
Sure, and that would be, for somebody that's got a little bit more risk tolerance and they want the ability to pull the dividend, the profit out, but also over the long haul, ideally the price of the stock would continue to increase. And, obviously, you're not going to recommend one stock for a client. So they're going to own many, or they're going to own a mutual fund that's focused on dividend paying stocks. And, so somebody's doing some research to say, okay, of the companies we're picking here, they all have a very long track record of increasing their dividends. They're not just somebody they pulled out of a hat, So, Walgreens, I think, would be an example. They cut their dividend this year, so they would be removed from a lot of the income paying pieces because, if you want dividends, you don't want companies that are cutting them. So again, that's where you have that give and take where that's nice where somebody's watching and paying attention. And, if they see something coming, they can get rid of that stock, bring another one in, for example. And, and I'm going to harp on this a minute, Peter, because again, good, healthy companies continue to make more money, which means they increase their dividend payout. So I don't have to do anything other than pick good companies to get an increasing income. I'm still owning the same shares and I'm getting more money for those same shares. That's a wonderful concept, and again, those share prices can go up and down, but it's the reliability of the dividend, not the share price that we're looking at in an income portfolio.
Again, talking with Chris McIntire, and today specifically talking about income planning. Once you leave the paycheck behind, it's not that you don't need an income, it's that you don't have an income. And that's why you specifically need to evaluate your investments and your asset allocation and your retirement accounts for how will you continue to be able to generate a reliable, consistent income in retirement, and then everything that goes along with it, the taxation, the inflation, the market volatility has to be factored in. And Chris, I know you talk to a lot of people who are rightfully so very excited about retirement. And then when you ask the question about, well, how are we generating income and how are we dealing with taxation and market fluctuation and inflation and government spending and potential healthcare expenses, there's a lot to be nervous about that goes along with the excitement of retirement. But bringing this home, having an income allocation, having a written plan is really going to help us build as much confidence as possible.
Yes, it's so vitally important to cover the basic living expenses through, knowing that your income structure is guaranteed and, through an insurance company from an annuity payment or, as good as income portfolios are with dividend stocks and all that, you still got to be able to weather some of the economic storms. So, building a well-balanced income plan is incredibly important, to take the stress load off of you. We live in a world today that everything moves so fast. It's high paced. It's very emotional out there. And, having the ability to say, look, I'm not relying on all that noise. I can turn that off, go for a walk because we've got, a nice plan in place. I'm not saying you got to ignore the world going on around you, but, we all know if something bad happens to you, you tell 7 people. If something good happens to you, you only tell 3.
Yeah, your spouse and your dog, right? Yeah. Well, Chris, the reason why we need an income allocation plan, a specific plan for more reliable, dependable income, markets fluctuate. They go up and down. Bills generally don't. They seem to only go up over time. Account balances can and will fall over time, especially due to spending or market fluctuations. The cost of living increases. Asset allocation, the traditional model of a diversified stock, bond, mutual fund portfolio, we've seen that fail. We've seen that fail multiple times over the last 25 years. Today, retirement can easily be 25 years or more. Do we imagine that the next 25 years is as good or even equal to what the last 25 years have brought us in the financial world? And I know a lot of people are really nervous about that. But again, bringing this home, having that plan in place and having the resource of an experienced, qualified professional continuing to watch and monitor and look over the investments and to continue to adapt and evolve the income plan. That's what's going to give us the confidence to live our life and not constantly be fearful of the market and the financial world and concerned about our financial outlook and running out of money, which I know is a big fear that you help address in the planning process.
Absolutely. And, one of the things that we hear a lot of is, I was talking to my buddy, and so
I heard on the this or that news show, or I was reading an article, or I saw in an advertisement. Right? It's there's a whole lot of financial noise out there, I think, Chris.
Yeah, that's a good point. Yeah, before my buddy made double bogey, he said,
oh, or a birdie, so I gotta trust him now.
Yeah, that's true. Yep.
Yeah, well,
But,
always
a lot of
Chris.
noise out there, Peter. You're for sure. You are exactly right. And, we help disseminate some of that noise.
Well, you only get one shot at an ideal retirement, ladies and gentlemen. Chris McIntire, he's got access to the full spectrum of the financial world, but understands the importance of planning and some of the pitfalls that others have experienced that you want to avoid. Make sure that you talk to a resource that can help you to identify those and to navigate the plan around those, as well as identify some optimal strategies. Again, right now, one of the best times to look at interest rates, to look at payout rates, to look at managing your taxation. All of those factors come into play in the income planning process with Chris McIntire there at McIntire Retirement Services. Give a call for that. No cost, no obligation, complimentary conversation to get things started, but initial review and planning strategy session. 800-868-1194. That's 800-868-1194. 800-868-1194. Chris, always appreciate your time here on the program. You are an excellent resource for us and all of the proactive planners and savers across Northwestern Ohio.
Hey, my pleasure. Good to be with everybody. I enjoyed the nice weather up here in Northern Ohio and springtime.
Always a pleasure, Chris. We will talk to you soon.
Thank you.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntyre. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.